Good morning, trading world. It is February 7th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. Yesterday, I talked about some tricky price action. So how about some Fed speak to go along with that tricky price action? 1 minute looking like the new bull market, and the next looking like the start of a correction. The jobs number definitely didn't help. Super strong jobs number gives the Fed ammo to continue raising rates and tightening monetary policy. This seems to have been recognized by the bond market and dollar. And if the bond market builds downside momentum below 127 on the ZB, I think the tech market will start to falter again. If that happens and you get falling tech and falling financials, this could bring the entire markets down pretty fast this time. Lots of people believe the financials are in good shape because they make more money with higher rates. To me, that's only true if there is plenty of liquidity or money to loan. Bank liquidity or pledged funds have seen a decrease since last year and are now well below pre-pandemic levels. With many banks steadily shoving money towards building loss provision funds, it's even less profitable for banks right now. We could be headed toward the perfect storm of low liquidity combined with higher rates, causing low to no growth with additional rate hike effects hitting in the middle of this shitstorm. Remember, I keep saying it takes 12 to 18 months for rate hikes to be felt by Main Street. We are in the middle of a shift in momentum and possible trend change on longer term time frames. And it is true that this is the point which could lead to a new bull market or deeper into a bear market recession. Now, consider this. In order for a new bull market to happen, there are usually tailwinds behind us that can push us to growth, push us to expansion, and loosening monetary policy where banks are ready to turn influx savings into expanding credit supply. Right now, all I can see are headwinds. Contraction of growth, contraction of monetary policy, and dwindling savings and contraction in credit supply. Does that sound like we are headed for a new bull market? I'll stop right there and let's go ahead and move to the key levels to watch for today. And here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance at 410 to 411, which is going to be pretty hard. The jack and queen resistance is going to probably bear many rejections today. So the jack resistance again 410 to the 411 area, queen resistance 412 to the 413 area will again bear many rejections as we bounce back and forth today. King resistance is going to be 414 to the 416 area. On the support side, we have our jack support at 409 to the 408 area, queen support 407 to the 405 area, and then king support 404 to the 401 area. The main thesis for today is bullish, closing above the 409.83 with a projected target high of between 409 and we can say 416, but 414 is that target I have my eye on, or actually a little bit below that 414 area. The alternate thesis is bearish, closing below the 409.83 with a projected target low of between 408 and 401. The main channel we're in is from 397 up to 416. The main channel above that is 416 to 425. Yesterday, market strength and breadth pretty much consolidated in a tight range all day. I expect a little rise in strength and breadth, but for the most part to continue to consolidate on the low side of the range and prep for a breakout that's building for a large bull move toward the end of the week. We do have dissonance between the technical side, which is bearish, and the quant side, which is bullish. This brings us to the scenarios of the day. All right, here we are back with the scenarios of the day, starting with our first and most probable scenario, which is a standard range day. We could have an initial push higher to resistance before chopping back and forth between different support levels and resistance levels on the day. Nothing special, just your run-of-the-mill range day, chopping back and forth. All right, our next scenario, if we have a rounded reversal day type structure today, is going to be a pretty choppy one. We could continue to push higher toward the Jack or Queen resistance area, find midday chop around either the Queen or King resistance before going back down with the same energy, or as far as today, the choppiness that we went up with the first part of the day. I do expect a lot of chop back and forth today, even on our rounded reversal day type structure. I do also want to bring to your attention a vice versa alert on the rounded reversal day type structure, and it just says that we could pretty much do the opposite, which is chop lower first. So we would have something like this with choppiness as well, where we would go or push lower first, find our midday chop around either the possible Queen or King support area, and then the second half of the day we'll go up with the same energy, strength, and choppiness that we came down with the first part of the day. So that is the vice versa alert on the rounded reversal day type structure. Last but not least, our least most probable scenario is going to be our trend day up. We can open with a gap up and start with a push back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible Queen or King resistance, and I would be looking for what could be considered a head fake to begin the second part of the day, looking to continue that uptrend only to reverse and be head faked back into sort of a fade going in toward the close. So those are the scenarios of the day. Remember, I said price action is going to be tricky all week. We're going to go back and forth, pretty much not being able to determine the direction from moment to moment. It is going to be choppy. But this is what happens when momentum is being lost and we're trying to determine this new trend direction. I hope this helps. And as always, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position, and we manage that risk in accordance to our account size. Again, I hope this helps, and as always, wishing you a positive trading day. Let's go out and make it a great one.